Hello, Short Vol Nation. I'm your host, Killer Dave Lincoln, and let's go right into the news. And that's just a highlight for you folks out there in the land of trading that there's a lot of stuff on YouTube that most people don't know about that watch this show. That it was, of course, my Keemstar impression from Drama Alert, which is one of my favorite shows on YouTube. And I wish my viewers watched more YouTube because there's a lot of fun stuff out there. I'm sure a lot of you do. Keemstar is one of my favorites to watch, even though his average audience is about 12 years old. Anyway, coming into today, we have an interesting day ahead of us. Not that much going on so far, but we are expecting a big announcement at 2 o'clock by the president vis-a-vis the Iran deal. And President Trump campaigned on getting rid of the Iran deal. He's talked about it a whole lot. And so the expectation is that they will cancel the Iran deal coming up this afternoon at 2 o'clock. Rachel Maddow reported on some story where they appear to be running some sort of black ops operation on these ex-Obama officials where they were sort of trying to smear them. Check out YouTube for that video. I'm not sure if I agree with all the controversy. I don't like to get into politics, so there I will cease to talk about politics right now. All right, let's take a look at the markets as we come in today. And as I already tweeted and sent out, the term structure is kind of holding pretty well right now. Actually, futures have backed off to only being down. ES only down 3 points, with the VIX hanging out under 15 still, and term structure intact. We see Contango still above 3%, which is very healthy, and we still are on track. I would like it to be above 5%, but above 3% we will take. I got a lot of positive feedback from the last couple of videos. One of the things people were asking me about was rates and commission rates, and I have been a big supporter for a long time of TDAmeritrade. They've given me great customer service. It's tough out there for these guys. Give them a break. I'm not saying give big corporations a break that are making tons of money and that are protected by politics. But what I am saying is that the brokerage business is a tough business. It is always changing. Things are getting more electronic. People are undercutting each other. And so I did share with some people the story of me taking my business away from TDAmeritrade to Tastyworks. I'm a big fan of Tastyworks, and Tom Sosnoff and crew. They're all part of the illustrious SIBO alumni, which I count myself as part of. They also do a great job of educating people. Tasty Trade Live is a great show. Maybe this is crazy, but I'm going to pull it up for a second here, directing you away from my show onto Tasty Trade Live. But let me just highlight this for a second because it is a great show. They're on every trading day, and they don't usually have they don't always have special guests. They're more about number crunching and that sort of thing. I guess they do have this Bootstrapping in America series where they have special guests, but Tom Sosnoff, great guy, actually did start Thinkorswim and then sold it for $1 gazillion. The software that they have at Tastyworks now is not as good, but they have great commissions. Now, closing trades are free with Tasty Trade, and that's a huge deal. That's 50% of the time you're closing, right? Obviously, there's small exchange fees in every trade, but closing trades are free. Now, the Tastyworks network, the brokerage does not cover all stocks. For example, I trade some OTCs, and it does not cover a lot of common OTCs. For example, I trade ACBFF, APHQF, TWMJF, which are MJ stocks, which they don't cover. Also, I am not interested in all the recommendations that they have with their software for trade ideas from people that work for their company. So that stuff is wasted on me. But Tastyworks, a buck an options contract, flat rate, I believe is what it is. And so TD Ameritrade, though, negotiable. And there's a couple things that a lot of people don't know about TD Ameritrade. One, if you do have a decent amount of money with them, and I'm talking about portfolio management size money, which means over $100,000 with them, you can enter something called the hard to borrow club, or hard to borrow something, which allows you to pay up to borrow stock in issues like UVXY, TVIX, and that can be very useful. Portfolio management is very helpful to trading options. It grants you a lot more relief as far as how much you have to pay, how much you have to put up to margin your or to manage your options trades when you're short options, and also in other circumstances. I had a bunch of help from a guy on StockTwits who actually set me straight and told me about the great deal that he got from TD Ameritrade, which pushed me to just keep going back to them, because initially they weren't willing to lower the rates the way I wanted. I was right away able to get them to lower the rates per stock trade, but when it came to options, it was a bit more difficult. They wanted me to justify this and that, and they wanted me to say, okay, they said, well, how much more money will you bring and deposit with us if we lower your rates? And to which my response was, I don't have any more money to bring to you. I'm going to bring you no money, and I want my rates lowered. And my point was basically like, you lowered this other guy's rates and you didn't lower mine. And the other guy's rates that they lowered, the guy had like less than $10,000 to play with. So rather than lose you as a customer, they would they'd like to keep you. And you know, the other thing that was successful for me was that, you know, I just happened to kind of mention in the mails I had with them, look, I'm a YouTuber and I talk about stuff online. And, you know, I think that, I don't know, I mean, maybe this had nothing to do with it, but if I were them, I would be thinking, well, it's better to have this guy as an ambassador for TD Ameritrade and to support us than to not. So, and I do support them. I've had great experiences with customer service with them. You know, it's tough out there for us short vol people. Even before the Volmageddon, people who were trading the short vol trade before then will remember that last year we had IB, Interactive Brokers, all of a sudden like triple how much margin you had to put up to be short options and also to short stock. As soon as I switched to Tastytrade, they changed their margin requirements for being short options. So instead of the standard calculation that like the SIBO uses, they added on to that. And so that all of a sudden made it much, much more expensive for me to sell naked calls in UVXY. However, at the time, I thought to myself, maybe this is a blessing in disguise that they're making it so difficult for me to sell naked calls. Maybe, you know, I'm upset about it now, but maybe I'll look back someday and say, wow, imagine that. They made it difficult for me to sell naked calls, so I didn't sell that many. And then if it spiked, maybe I'll be thanking them for it. And guess what? Less than a month later, it did spike. I got lucky and covered my short calls on the 7th at before noon, before the big spike. And you know, part of that may have been due to the fact that these brokerages were making it more difficult for me to sell calls. So, you know, it's funny in trading how, like, when something happens that's beyond your control, sometimes it can be a gift from the trading gods. And that's kind of what happened for me. So I guess my advice for people with brokerages is negotiate with them, talk with them. I did take my money out of TD Ameritrade and transferred it to another firm, and then I said, if you lower my rates, I will come back, and I did honor that. They lowered my rates, and I did honor that, and I did come back to them because I believe, that I should be fair in my business dealings. Obviously, me coming back or not was not going to make or break that company, and probably the person I talked to who made the decision to lower my rates had nothing to do with other people who you talk to on customer service, and probably the company itself didn't even notice that I came back after they offered me the better rates. But guess what? I know it in my head, and I know it that I've conducted myself honorably, and I said that if they lower the rates, I would come back to them, and I have, and I continue to support them. I've been in a couple margin call situations with TD Ameritrade where, like, for a while, they do have slightly tougher margin requirements on VIX products than regular ones as far as being short options. And so it was a situation where, like, some of their apps reflected the higher margin requirements and other didn't. So if I went to their website and pulled up my account, it showed me as having more buying power than if I pulled it up on Thinkorswim. And also their other trading app that's not Thinkorswim, that's on the mobile, showed me having more buying power than Thinkorswim did. And actually, it not only showed me having more buying power, if I did tap into that extra buying power, I was able to use it. But that did put me in a situation where Thinkorswim had me in like a call situation, whereas the other apps didn't. And so I just ignored that for a while and just kind of stayed in the call situation. And they didn't actually put me on a margin call. It was like a warning or something like that. But eventually they did put me on a call, and I was able to negotiate those waters with their help. I had the risk manager from them on the phone, and they said, I said, what can you live with for me reeling in my risk? They told me what they could live with, and I immediately executed that trade. As a pro, I had to work with a risk manager all the time, and I listened. I did what they said. It was their money. My risk manager was also the guy who was putting up a lot of the money, and otherwise known as Uncle Bill for those of you who were with me back then. And what they say goes. So same with TD Ameritrade. When they wanted me to reel in my risks of short options, I listened to what they wanted me to do, and I did it. I understand these guys have to manage their risk, and when you're in a situation with short options where your account value could go negative, it's something you need to take seriously. The last thing you want to be doing is paying back money to some brokerage firm. You see these horror stories of people shorting $2 stocks, and then it goes to 20, and they have a GoFundMe account so that they can get back to zero. I don't want to ever put myself in that situation. Trading stuff happens, and you want to manage your risk. Keeping from losing money is the key that keeps you in the game and keeps you alive to keep trading. And fortunately, I was able to stay in the game after, with that Volmageddon. It was very painful, but I was able to stay in the game like a lot of people were. A lot of people blew out. A lot of people on StockTwits just aren't there. The short vol people aren't there anymore, and it's unfortunate. And the others are, smarting still. So let's take a look at the markets right now. Like I said, VIX up 19 right now. 19 cents, that is. Not a whole lot going on. We're in contango by around 3%. Let's pull up the contango. I'm going to go to VIX Central here. And we see ourselves being contango by 3.08%. This is obviously delayed. So the chart the term structure looking pretty similar to where it was looking yesterday. Everything just kind of rolled up slightly with the slightly down markets today, but the structure is staying in place. And to me, it's like, well, the VIX can go up and down, but as long as we're staying in contango by a decent amount, we are decaying the whole time. So that's great. Just position-wise, I have changed my options position right now. Right now I have a small call spread on. So which call spread do I have on? Let's take a look at UVXY here for a second. And that's not what I want to look at. So anyway, I have a small call spread on. UVXY is 14 right now. I have the July 14.17 call spread on, which I sold for 70 something cents. I think 72 cents. So I need UVXY below 14 on July expiration, which is in around 40 days from now. It's a small trade, but it's a managed risk trade where I'm not just long puts to bleed me to death, which is my long puts haven't been performing very well. They've just been kind of bleeding. So I opted to switch into a short call spread because it limits my downside, and A, and B, it's not decaying against me every day. So I figured with UVXY around 14 right now, if we can just get a little decay over the next 40 days, then with the VIX right around here, UVXY should be below 14. So that's my thinking there. I think I will probably add some more spreads later this week, possibly, depending on how things go. If we continue to stay and build this contango situation, then it makes me more optimistic to add to my short delta here. So that's where we stand with that. Let's just take a look at UVXY right now, the chart for it, and let's go to the daily. So a little bit of slightly up overnight, but these are small moves, folks. This is like an 80 cent range here, or 70 cent range. This whole chart. So small moving compared with usual. Remember now, the major indices were moving a whole lot, and that was adding to the volatility, with these 1% moves every day. Now we're seeing smaller and smaller moves every day, and that is going as, real movement, real volatility, current realized volatility comes in. That is going to put pressure on the VIX. If you think about it, people who own SPX options, calls, puts, straddles, what have you, as stuff moves around less, they're just holding on to that premium, and it's just decaying, and it becomes a hot potato. Nobody really wants to be holding on to that premium when it's not working for them. So vol tends to come in, and we've seen VXST, which is the closer front month volatility, really come in over the last week. People talked how it was up slightly yesterday. Same with VVIX. VVIX up slightly yesterday. However, the general trend has been way lower. If we look at VVIX over the last, let's say, 20 days, a lot lower. And VVIX being the volatility of the VIX, what's happened to option prices in the VIX, option implied volatility in the VIX, down. Now, VXST being the nearest term volatility, and that coming in a lot, down to 1422. So that should put more pressure on the VIX to actually go lower. But as I stated before, the VIX can even stay here, and it's good for the short vol trade because we are set up in contango here, and with a right now 96 cents in the roll. That's 96 cents that the VIX has to move down or the future move up to, that's 90 cents, 92 cents that the VIX has to move up towards the future, or the future has to move down to the VIX. So if the VIX stays here, that future in the next few days before expiration has to move down a point. Even if VIX doesn't do anything, if VIX doesn't move down any lower from here, the future still has to move down a whole point in the next few days before expiration to converge with the VIX. So there is downside pressure, not just from, contango decaying things over time with rebalancing and whatnot, but just the futures. The front-month future has to drop down to the VIX by expiration. That's how it works. It's resistant to do that right now, but if nothing happens and we come in through the week now and then towards the weekend, there's increasing pressure on that future to fall towards the VIX. So be aware of that. That's why we watch the roll, because the roll has to go to zero on expiration or very close to zero. It is currently a point which is pretty large for a week to go. So I would say it's average to large for a week to go. But as this week to go starts to progress, there's continuing pressure on those futures to go lower. And so we could see decent setup into a decent contango over where we are and above where we are right now of 3%. Right now, the future is actually doing the opposite of that, with the front month up 15 cents and the second month up 7 cents. But, we are pre-market. It is early. These markets could turn around. I can't predict what will happen at 2 o'clock. I can make a case either way for the markets. I can make a case that, it's expected that this Iran deal is going to be called off, and once we have certainty on it, the markets could rally because you've added certainty to the markets. Could also see it selling off, but pretty slow business week. A lot of people have commented yesterday that there's very low volume in all this stuff. And when people say there's low volume, and that means that I think they're trying to apply sometimes that these moves aren't significant because there's low volume. The way I read it is just there's nothing going on. And so, vol coming in a little bit when there's nothing going on makes sense. Now, vol didn't come in that much yesterday. It just kind of, we did have weekend effect, which I have beaten. I've talked to weekend effect too much, so I'm going to stop talking about that. But vol just kind of stayed the same yesterday, but the futures did move around in the term structure and did move to increase contango. Vol conceivably not coming in because of waiting this announcement today, but after the announcement, it could collapse further. Once again, realized volatility of these major indices not moving around that much is putting pressure on this system here for vol to go lower. Be careful if you're getting long this stuff. Obviously it's a better level now to get long the VIX than it was, with the VIX at 18 or something. But these decay type features of these ETPs are really starting to kick in now and becoming a drag on things. So if you are going to buy UVXY or TVIX, if that's your choice, which every trader has a choice of what they want to do, I would recommend not holding on to them for more than 48 hours, which I give that recommendation a lot. Anyway, I'm going to let you get going because the markets are about to open. And I'll move on with our trading day. So let's get on with the show here, folks.